What is going on, investors? Hopefully, you guys are doing well out there. We're on the eve of one of the bigger earnings weeks that we've had in a long time. And on today's show, we're going to preview Meta Platforms earnings, which comes just 3 days from now on Wednesday, July 27th. After the closing bell of the stock market. On today's show, we'll look at some revenue trends over at Meta. Obviously, this stock is down big time. So we'll take a look at some of the things that has happened in the past over at Meta. We'll certainly compare it a little bit to Google. We'll look forward as well. We'll look at some of the forward estimates, some of the revenue and EPS guidance that Wall Street has for Meta. We'll also look at the valuation of this one, certainly compare it to Google as well. When your stock is down 50% year to date, you better believe that the valuation over at Meta has gotten really attractive. We'll look at some news items that have crossed since the last quarterly earnings report about 3 months ago. Obviously, Sheryl Sandberg stepping down is one of the larger ones. And I have some Meta questions when it comes to Meta. I have some questions that I'm going to ask. Some of these are simply rhetorical, but I'd also maybe like to hear from you in the comment sections down below. And then we'll look at this from a technical perspective. If you follow our Friday show, this one's setting up kind of interesting. That's why we're going to watch this very closely heading into those earnings, which again are just 3 days from now on July 27th. That is a Wednesday. Now, like I said, Meta Platform stock down 50% year to date. Wall Street estimates Meta's earnings in the upcoming quarter on the revenue side just at $28.9 billion. Facebook gave guidance in Q1, so about 3 months ago. They expected the revenue to be between 28 and $30 billion. And I posted a video at the time and mentioned this several times whenever we talk about Meta, is Meta has a $29 billion problem. And obviously that would be a great problem to have, but for a public company, look, they have to meet expectations. And certainly when you have competitors out there like Google and certainly TikTok growing much more rapidly, you have to answer to those questions. And what I mean by a $29 billion problem over at Meta is, look, in Q2, we had $29 billion worth of revenue. In Q3 of 2021, guess what? You had $29 billion worth of revenue. Now, in Q4, advertisers or platforms for advertisement like Meta, like Google, well, look, there's a ton of spending on ads. You'd expect to have more business during the fourth quarter since it's Christmas shopping season. Well, they grew just 20% to $33 billion. And then fast forward to a more normalized quarter in Q1, Facebook had just $27.9 billion worth of revenue. And so you guessed it, that's probably one of my first questions I have with Meta is, can they achieve over $29 billion worth of revenue in a non-fourth quarter? Because Meta has not been able to do that since the Apple iOS 14 changes. And now, not to get too deep into the weeds in online advertising, but in Q2 of 2021, that is when we saw Apple lay the smackdown on tracking what apps you've been to on the phone, what your search history was. Basically, an advertiser from Meta could see a wide swath of the things that you're interested in, the apps you've downloaded, the places you've been. Well, Apple basically erased and eliminated that capability. And you've seen since Q2 of 2021, you've seen the growth rate over at Meta just fall off a cliff. You went from 55% growth to 35 to 20 to just 6%. And Wall Street and even Meta themselves are projecting essentially 0% growth year over year, a year later after those iOS changes. And it's not just me bringing those things up. I go deep into the weeds on online advertising because aside from YouTube, actually how I feed my family, how I pay my bills over here is actually through online advertising content websites that I've ran for over a decade. And you see here, this is an article dated April 28, 2022. Advertisers reflect on iOS 14 changes a year later. This is still being discussed in online advertising circles. So when I point out iOS 14 changes happened a year ago, this is very, very significant. I don't expect every Meta investor to understand this, but if you understand online advertising, there was a seismic shift by these changes. And I'll remind you that we have just seen the changes from Apple. Google is going to roll out their own changes. Obviously, they have their own online advertising business to protect, so they won't be as blunt as Apple was. They'll roll those changes out over time. They'll probably be a little bit softer rollout. Apple just bang, whacked it on the industry, and you've seen with Meta, it's basically declined the stock and the value of this company by over 50% over the last year, and online advertisers are still talking about those changes. Now, it's not just the revenue over at Meta that basically fell off a cliff. Notice your EPS went from 361 last year down to 272. You also have operating margins. While 30% operating margins are still fantastic, and some of you might bring up, and some of you might even watch my Google earnings preview yesterday, this company has maintained nearly 30% margins for the last year or so. But the difference between Google and Facebook is Google has been able to maintain a 20, 30, 40% growth rate despite the iOS changes. Whereas when we looked at Meta, well, their growth rate literally fell off a cliff the minute those changes were enacted. And then obviously, if you're in the weeds of online advertising, the changes that Apple made more adversely affected Facebook's advertising than you had over at Google. So some of the things that we'll be looking for on July 27th when the earnings happen is, can Meta maintain these 30% margins? Because if they can maintain the 30% margins, we're going to give credit for Meta maybe going through a little bit of a bumpy road in terms of revenue growth. But if they can reaccelerate revenue growth and maintain these margins, well, yeah, that's the recipe for a stock that is undervalued. Now, what I want to do with Meta is start looking forward a little bit. Let's look at the forward earnings estimates over at Meta. They're outlined here in red. So we're sitting at Q2. We're obviously on the eve of these earnings on Wednesday. Revenue estimates from Wall Street coming in right about $29 billion. I showed you Facebook anticipating between $28 and $29 billion. That is a decline, a year-over-year decline on that revenue growth. So some of you have been chirping in my comment section saying, well, Facebook's such a great value. Their price to sales is 4 and their price to earnings is this. Well, yeah, it's cheap because their revenue growth has fallen off a cliff. And look at where Wall Street is projecting this to grow. In Q3, we're growing just at 5%. In Q4, just an 8% growth rate. Back into Q1, that is when we finally reaccelerate into double-digit revenue growth at just 12%. Again, you're not going to get a premium on a stock across any sector of the stock market, but especially in online advertising and tech, if you're growing at low single digits. But if you can re-accelerate that revenue growth, and I tell you what, if you're sitting on the other end of this video watching this and you totally believe that Meta is going to be able to not only meet these Wall Street estimates that they have, but then re-accelerate into Google-like revenue growth into the future sometime in 2023, 2024, well, yeah, you probably should be buying Meta stock today. From a Wall Street perspective, we have, again, I showed you on the forward estimates over at Meta, mediocre growth for the next 4 quarters. But Wall Street, starting in Q2 of next year in 2023, they're actually expecting this company to reaccelerate to mid-teens growth, which would put it on par with what Wall Street is expecting out of Google. They're expecting Google to be kind of a mid-teens grower for the upcoming few years. Same thing on the earnings side. We're expecting earnings to really contract over at Meta over the next couple of quarters. This is the other thing that has the stock under pressure. But again, Wall Street expects this to reaccelerate in 2023 and 2024. And again, if you're on the other side of this video and you're an investor and you believe these estimates, well, in my opinion, this is not priced into Meta stock today. Is reaccelerating their earnings growth, reaccelerating their revenue growth. If you believe that is going to happen, and there's certainly some things that would allow that to happen, well, this would be one of the better buys. Now, from a valuation perspective, here's kind of supporting that argument. I've got Meta in orange trading at a price to sales below 4, and I've got a 10-year price to sales historical average over at Meta, and it's never been this cheap. Google trading a little bit in a premium, which is actually unusual over the last 10 years. Google trading closer to 5.3 times sales. And again, the reason why Google is trading at a premium to Meta when Meta used to trade at a premium to Google is just by the fact that Google has maintained these margins and their revenue growth has also maintained. In fact, it's far surpassed Meta over the past couple of quarters and into the future in terms of analytics analyst estimates. The other thing that we can look at is price to earnings. I've got Meta here in orange, and you see exact same thing. From a price to earnings basis, you're trading just 12.8 times earnings. This is on a trailing 12-month basis for Meta. You see Google trades at a big premium. We're talking about one of the larger premiums. There's been some deviation. It's a 5-year chart, but for the most part, these have been trading pretty close from a price to earnings basis. Now Google trading at 19.5 times trailing 12-month earnings. Again, the reason why is analysts expect Google's forward earnings to be better, so you're willing to pay a slightly more premium today than you are over at Meta. Now, some of the things that are obviously driving some of the negative sentiment over at Meta is the fact that they are now cutting spending. This is on the eve of last year. This company switched their ticker, switched their focus to that metaverse, talked about all this spending and investment they were going to do, and then all of a sudden they start putting up some bad quarters, and then the stock declines by 50%, and they decide to just cut the spending, which kind of was a little bit of a head scratcher for me. Makes me feel that maybe Meta is not as confident in their future as maybe some investors are out there. So they revised their expense outlook. In the beginning of the year, they were expecting to have about $92 billion worth of capital expenditures. They shaved that back by about $5 billion to about $87 billion. Again, this was actually in Q1. So it looked like they were going to shave off about $5 billion over the next 9 months or so. Now, we also saw the fact, we're seeing this across the board in tech, but Meta slipped earlier in June as it slashed their engineer hiring, and they're turning up the heat. Mark Zuckerberg was quoted as saying, realistically, there are probably a bunch of people at this company that shouldn't be here. Some of you might decide that this place isn't for you, and that self-selection is okay by me. I wish Mark Zuckerberg would grow a sack and just fire these people. Don't make them walk away. If you don't think they should be there, you should get them out the door. I would like to see a little bit more clarity on that from Mark. And then obviously we saw Sheryl Sandberg, which had been with the company since 2008. She bounced out the door. She was in place with an internal candidate. My guess is she was making a ton of money. So this might be some of the capital expenditures that they might be able to cut back. Now, in terms of Meta, I've got some questions with Meta, and those of you that tuned into the channel know that I'm looking for gold medal winning stocks that perform at a high level year after year. Certainly you can put Google in that camp. Certainly when you compare it to like the athletic environment, in Tiger Woods' prime, none of us questioned really anything about his game or whether or not he was a favorite to win any tournament that he entered in. That same true could be with Michael Phelps or Michael Jordan or any of the elite athletes out there, Serena Williams. There's a ton of elite athletes. When they were in their prime, you didn't have a lot of questions. And so when I think about Meta, I have a lot of questions. And that's why from a longer term perspective, there's a lot that needs to happen with this company before I start to turn bullish again. First question that I have is, can Meta earn over $29 billion in a quarter that's not a fourth quarter? I showed you the fact that this company has not been able to get over $29 billion of revenue in a quarter since the iOS changes were made in the second quarter of 2021. Can they get over that? Again, Wall Street is really not anticipating that until you get to about 2023 over at Facebook. If you believe that is going to happen, if you believe they're going to be able to get over $29 billion worth of revenue outside of a fourth quarter, stock's probably a buy. Can Meta maintain 30% operating margins? The reason why those 30% operating margins are important is their number one competitor, and where a lot of investors will say, well, I want to invest in online advertising. Do I invest in Google or do I invest in Meta? Well, they'll look over at Google and they've got 30% operating margins even after the iOS changes. Now, the trends over at Meta still hold up with those 30% margins. And we've got to imagine some of these stories about executives leaving, about firing, about cutting cost. These are all done with the idea to maintain these margins. So the answer to that question is I actually think Meta probably can maintain those 30% operating margins. Here's a big question. Will the United States ban TikTok? I tell you what, I'll probably be the first to jump on the Meta train if the United States government bans TikTok, because all of those influencers, guess what they're going to come running to? They'll be coming running over to Instagram Instagram and be posting their reels and dancing on the screen as soon as TikTok is banned. If TikTok is banned, that's incredibly bullish for Meta. I think that remains to be seen if that happens. Now, will short form video ads be as profitable as text and image-based ads have been for over a decade online? This goes a little bit into the weeds of online advertising, but obviously with the rise of TikTok and just the natural shift of people's desires online, we've gone from like reading text and reading emails, we've gone to kind of posting our own stuff and our own text on sites like Facebook. Now we've gone to more posting photos and now videos and live streaming to our Instagram feeds, to our Facebook feeds. The shift is more and more towards that. Certainly when you look at the popularity of TikTok, all these other platforms are trying to capture some of that traffic and that popularity. Will those short form ads that play either before or between videos, will they be as profitable? I think they'll be as profitable for Meta, but really the question that you have to ask is, will they be as profitable for advertisers? Okay, for over a decade, I've been running text and image-based ads. Those are incredibly easy to make, incredibly easy to judge. They're easy to click on. When we're talking about a video ad, do they get clicked on as much? Do they convert as well? I'm talking about the e-commerce store owner, the website owner, the people that actually pay Meta. Essentially, Meta's customers and the way they generate revenue is from these advertisers. Will they shift to short form video ads? Will they be as profitable? Will there be as wide of business using those? We saw a lot of small businesses. In fact, the vast majority of Meta's earnings actually come from small businesses. Will small businesses convert to short form video ads from the text and image ads they've been using over the last decade? That's still a question I think that remains unanswered. And now finally, I think this is the biggest question that I haven't found a good answer to, but is, will the metaverse, let's just assume Meta shift into the metaverse, everybody's going to throw on these Oculus goggles and play around all day or for like 5, 6, 7 hours a day on the metaverse, and we're going to all have this alternate reality, and that's where society is going. Let's just assume that's where a society is going. Will that revenue simply just replace Facebook.com and Instagram? Because if I have something strapped to my face all day, I'm probably not going to be posting on Facebook. I'm probably not going to be posting on Instagram. Will the metaverse simply replace that? And certainly if, again, we're assuming that the metaverse is going to be this great thing. It'll replace the internet. It'll replace everything, basically. Everybody will be on it, just like, quote, everybody is on some kind of social media site. If that is the case, will the revenue from Facebook.com and legacy Instagram, will that just simply be replaced by the metaverse? Also, you have to factor in, if the metaverse is as big as Meta thinks it's going to be, guess what? There's going to be competition down the block for those types of things. And will Meta have as strong a position in the metaverse as they do in social media with Facebook, Instagram, and WhatsApp? Those questions are longer term questions, and I think they need to be answered before you really get confident from Meta's stock from a long-term perspective. Now, speaking of more shorter-term perspective, we'll look at this from a technical perspective. Now, since the report of last earnings back in February, this stock went from over $330 per share all the way down here to $250. I told you to sell at $220. Looking back, that has been a pretty good call because the stock is now trading at $170. I've been back in and out of this one. I think there's certainly some trading opportunities here. And certainly when you look at the business, it's not that bad. The only thing that is really shriveled up over at Meta is really this revenue growth rate. Okay. It went from like kind of a mid-teens to even a 50% grower to a 0% grower. So if that, again, if you believe that Meta's revenue will accelerate, and if TikTok gets banned, and if advertisers flood into short form video like they did text and image ads over the last decade, well, yeah, Meta's revenue is likely to accelerate back into the double digits, and that makes this stock a fantastic buy. But if you don't believe that's going to happen, well, chances are this stock is probably overvalued to a certain degree. Now, we'll look at this price action that we've had over at Meta since that earnings drop, and we have just been channeling down with very little deviation. Now, in the very shorter term, we're talking basically the months of June and July, this stock has actually been making higher lows and higher highs So a mini uptrend over at Facebook, and we actually popped out over and above that more recently. Now, after Snapchat reported their earnings on Thursday last week, all online advertising stocks kind of took a dump. But in the case of Meta, we've really just kind of pulled back into this trend. So with Meta, when earnings come out on Wednesday, if this one just trends back down to the bottom of this channel that it's been in. So basically you go from about 169 on this stock down to about we'll just round the numbers off, right back down to 160. Well, I would assume that this shorter term uptrend that we've been making is still intact. And again, I'm talking about from a technical perspective. I would assume this stock would find some footing there and maybe bounce and retest the highs. So certainly from a technical perspective, there could be a buying opportunity if Meta sells off after earnings down here to about $160 per share. Let's assume that maybe the Wall Street reaction to Meta is even more negative to that. It actually breaks through this shorter term uptrend. Well, you should have some support again in the intermediate term. Okay, we're making lower lows. If we break this trend, we'll simply just make another set of lower lows here, down here at about $150 per share. So on the downside, you're really looking at 160 and 150 with Meta. I tell you what, if they meet expectations or come underneath them a little bit, I think it's a high probability we meet 160 and 150. Now, if they get on the call like they did back in February and they have a very grim outlook on Q3 and Q4 and maybe parts of 2023, well, this thing could slice right through this area and go much further down. We'll evaluate Meta at that time. We're assuming that expectations get met to a certain degree and we sell off with Meta. There should be some support down here at about 150. That also, I think from a technical perspective, could be a buying opportunity because every time this stock has hit this low, it has bounced back and then tried to work back at least to the middle of the channel and maybe all the way back to the top. Folks, that could be a $40 move on this stock. Now, the other thing that I want to make note with Meta is, let's say they come out and Wall Street really likes what they hear with Meta, and we go from about $170 stock, and on Wednesday in the after hours, we pop all the way back up here to about 190, maybe even rounded off to $195 per share. Folks, you are still in this downward channel. You're making lower sets of highs. You're making lower sets of lows. This stock could pop $20 in the after hours and it could hit its head here. This is personally where I would not want to be buying Meta. This is probably where, if you have some shares and you have them at a profit, I'd probably want to sell, because guess what? Since the beginning of the year, when we've met this top of the channel like clockwork, we've reversed and come all the way back down to the bottom. Again, that's what you expect from a technical perspective. For this stock to really get out of this downward channel, you need to make a push from 170 on this stock all the way back to the 220 mark. That's why we suggested selling this stock numerous times here on the channel at 220. Get out of this one at 220. You get all the way back to 220. I would expect some selling pressure to come in, but at that point, we will have ended this downtrend, at least in the shorter term, where you were making lower highs and lower lows. Well, all of a sudden, you will have done something different from a technical perspective. For Meta to do that, in my opinion, the guidance needs to come over and above where Wall Street expectations are, which again, for the quarter on July 27th, that's the upcoming quarter, that's Q2, we're expecting right around $29 billion worth of revenue. If we get guidance from Facebook, which we should, on Q3, and look, if they start pulling their guidance, that'll be a disaster. The stock will likely sell off just like Snapchat did. But if we do get guidance, again, right in that $30 billion. I don't think Wall Street, from a price perspective, actually has Meta meeting these expectations. And this is a really low bar over at Meta. 5% revenue growth, 8% revenue growth, 12% revenue growth. I think if Meta guides and meets this stock is probably undervalued. Again, comboing that with the fact that they maintain these 30% margins. And the real upside with Meta is if they somehow come out with Q3 guidance well over 30 billion, even 31, 32 billion, that would be incredibly bullish for the stock. And if there's indications that into the future, they can grow back into a mid-teens grower, this is a stock that will likely rally and rally pretty significantly, likely back into the $200 per share. Very interesting stock. I am playing this just from a shorter term perspective, only because there's too many unanswered questions. When I was watching Michael Jordan and Magic Johnson and Kobe Bryant and Shaquille O'Neal and Tiger Woods in their primes, I didn't have any questions about them. That is how I evaluate stocks in the stock market as well. If I have a bunch of questions about a stock, all of a sudden it's a little bit more speculative, and I tend to play it from the shorter term. We start answering these questions over at Meta with 30% gross margins and a dominant position in social media. This is a stock I would love to love again, but these questions have to be answered. We have to get over $29 billion in a Q1, Q2, or Q3. Meta has not proven that they will be able to do that, and Wall Street, I think, doubts it as well. We'll get answer to those questions on July 27th. Make sure you hit the subscribe button. All next week, we will be keeping you updated on all the major earnings, going through all the financials that we normally do. It's a big week. Hopefully you guys enjoyed today's video. We'll be back again next week. Good luck with your investments.